Hello listeners, and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. In today's pod, we take a look back at the key developments in UK and continental energy markets over the last quarter, as well as discussing what the issues will be in the coming months. Will the downward trend in energy demand continue? What will happen to prices? And most crucially, does everything depend on the weather? I'm Richard Sverrisson, and joining me today are two experts from Montel's EnAppSys. A warm welcome, Paul Buckworth and Jean-Paul Harreman.
Thank you. Thank you.
Before we kind of take a deep dive into the report that you guys wrote about the last quarter and discuss the following months, I'd just like to, two recent events have sort of highlighted or thrown a lot of uncertainty into markets. And I'd like to start off with the Baltic pipe incident. We don't know what's happened there. The gas pipe connecting Finland and Estonia suffered a massive loss of pressure. There's suspected sabotage. We don't know. But, I know we can't really speculate what happened here. But what are the implications for the market here, the European gas and power markets, Paul? What's your initial reaction? Does this raise questions about the vulnerability of energy infrastructure?
Indeed, yes. Yeah. I think it does very much highlight that. I think the trends that we've seen in recent weeks and months have seen an easing, if you like, of the perceived pressures in the market that came about following the build-up to and the aftermath of the outbreak of the Ukraine war, and some of those pressures have eased a bit, although we have seen jitteriness in the markets and spikes in market prices in response to short-term events. But this latest development really does, I think, highlight that and bring into kind of clear view the potential vulnerability of supply to infrastructure exposure and risks such as that. And I think that will likely feed through into market sentiment and potentially we see prices spike even without further impact on infrastructure. Just the risk premium that will be there, it'll create its own pressures, I think.
Jean-Paul, what's your view here? I mean, we've seen incidents at both Nord Stream and now the Baltic pipe, neither of which we know exactly what happened, but is it more the gas infrastructure that's vulnerable, or is the sort of power infrastructure also problematic here?
Yes, well, we've seen some studies on the offshore industry as well. So offshore winds, of course, far away from any protection. So you would say that has similar vulnerabilities, and it's just feeding into a little bit of the nervousness of the markets. So we're seeing a very tight supply-demand balance. You can see even rumors or sentiments are affecting prices quite quickly.
And what about the Arab-Israeli conflict now? We've seen some horrendous incidents in Israel and in Palestine. Is there a risk here that there could be contagion into global oil and gas markets here, Paul?
Very much so, I would have said. Any escalation will certainly feed through into market sentiment. I do wonder, it's not my area, but any escalation that could draw other nations and producer nations into any sanctions regimes would likely have a major impact on energy supplies, gas and oil, and feed through into electricity prices. I think, despite what I said earlier about the situation of having eased in recent weeks and months, that there is still tightness there, and the response to any events that we've seen is quite marked. And this is just an order of magnitude more serious than any of those other events that we've seen over summer that have fed through into pricing and supplies.
Jean-Paul, what's your view?
Yeah, I think the direct exports from Israel to the European Union are quite limited. I think, it's the political effect of it. So if indeed other nations get drawn into the conflict, that may, a lot of the Arab world are major suppliers of gas to the world. So it's a tight balance, and the recent history has shown that conflicts can get out of hand quite quickly.
It's a bit of a powder keg in a way, isn't it? Okay, let's go on to the quarterly reports that both of you authored for EnAppSys. in Q3 we saw what happened to prices, Jean-Paul, in continental Europe. What were the trends here?
Yeah, we've seen quite a relaxation on prices. So we've seen a drop. Yeah, partly because of the dropping gas prices. Also, the gas storages are quite full. The hydro situation is quite comfortable. So you're seeing a lot lower prices, especially compared to last year, but also compared to the previous quarter. And it's also produced some extreme events in terms of negative prices. So the Netherlands is a clear example with a lot of negative prices due to the immense solar development. But we've also seen negative prices in Scandinavia, which is quite interesting because that used to be a region that was quite well safeguarded from negative prices. So Finland is the biggest example where the nuclear power plant basically increased the base load level and that sort of results in some surplus situations. But also the prices of GEOs have increased quite considerably, which means that even if you run at a price of zero, you can still make money on your guarantees of origin. So interesting developments.
And do you expect these sort of trends to continue in the coming months as well? I know that we're entering the darker months, as it were, so solar shouldn't have too much of an impact, but I'm sure it still have some consequences.
Yeah, well, we're going to see higher prices than this quarter, of course, because it's winter and demand is higher. But yes, the wind is coming back, so we're going to see surpluses that last a bit longer. And I think if looking at Scandinavia, so in the past we used to see flows from Scandinavia to the continent, basically non-stop. Over the summer we've seen reversals of interconnectors quite frequently. I think that's a trend we're definitely going to keep seeing.
And in the UK, Paul, what were the major sort of trends in the last quarter?
Very much downward trend on pricing, similar to what John Paul has described in continental Europe. That's driven by the linkage between gas and electricity prices, albeit there's a general downward trend, well, through the whole year really, but that's certainly continued through Q3, with the exception of some blips in July, which I think were related to prolonged or longer than expected outages in some of the gas fields. I think Nyhammer in Norway was the one I recall. And then in late August, early September, there was prospect of an Australian LNG strike disrupting supplies, and that sent the worldwide gas prices and LNG prices upwards for a period. And that fed through into what we saw in electricity prices. Perhaps lesser extent of negative pricing in GB, less pronounced. We saw intervals in early July, which I think was a windy period, and then in early to mid-September, where we saw another very windy period. So there's a high level of renewable output coupled with the low levels of demand that we see at this time of year. So creating an excess of supply, and that fed through into negative prices in the day ahead market in those periods. In the balancing mechanism, we probably see negative prices to a greater extent, but and those are localized and reflect transmission constraints, so don't filter through into the day ahead pricing in quite the same way. Albeit the customer ultimately pays the cost of those in their bills.
Absolutely. I mean, what do you expect in the coming months, then, Paul? As John Paul has said, there's more demand, and but potentially that could be counterbalanced by more wind.
Yes, yeah, indeed. Demand will pick up as we move into the winter, so that seasonal pattern will re-establish. I mean, in Q3, one of the in fact, a lot of recent quarters, we've seen very low levels of demand against historical norms, and that reflects a number of things. I think there's price sensitivity to the high prices, probably being the main one, but also some growth in renewable, so embedded renewable generation and even behind the meter renewable generation. So that reduces the apparent demand at transmission level. So that trend is still there in terms of the growth of renewables. We saw high levels of renewable output in Q3. I think it was the highest Q3 we've seen. And looking back at historical quarters, the same quarter historically, and that reflects the underlying upward trend in installed capacity. Yeah, going into the winter, obviously solar will decline. That has very seasonal output. Wind tends to be less seasonal, but it is higher in winter generally than summer. But the differential between summer and winter is obviously far less pronounced than for solar.
But as you mentioned as well, Paul, with the Australian strike and how jittery the market was, or how prices spiked, not just in the UK and Europe, but across the world. The market is still very nervous, as what's was being reflected in the price of gas this week on the continent and in the UK, given the situation in the Baltic Pipe and the questions around infrastructure, as well as the Arab-Israeli conflict. So we can expect maybe more of the same kind of volatility going forward.
I think so. Yeah, potentially accentuated because of the winter. Increases in demand, and there's less headroom, if you like, to accommodate any shocks in the supply-demand balance. So I think through the summer, there's certainly jitteriness there, despite the fact that storage was being filled and at high levels, and whatever short-term disruptions there might have been, the longer-term trend was that storage would be filled by the end of the summer, and despite that, there's still occasional jitteriness. I think going into the winter, anything that impacts that balance and eats into any headroom that might be there will feed through into the market, and we'll see quite sharp reactions to that, to any such events, I would imagine.
Absolutely. John Paul, we talked a little bit about demand. What have we seen in Q3? And, there's a lot of talk about demand destruction, anything from on the industrial side, also households. What happened in Q3, and what can we expect over the coming months? Is any of that, the industrial demand going to return?
I don't think that's going to return on the short term. So we've seen demand destruction in the chemical industry, in the steel industry, in the paper industry. Some of that is shifting production to other continents. So, if prices drop down low enough, that might come back. But there's also some permanent closures that have happened. So I think with demand now being at similar levels than during COVID, we're not going to see this come back to the old level anytime soon. Of course, next to demand destruction, there's also demand creation slowly starting to pick up with power-to-X technologies and people starting to develop electrolyzers and hydrogen generation sites. But it's a question mark how fast that's going to come, and how big of an impact that's going to have. It's definitely not going to have a major impact this winter.
And maybe next year, do you think? The power to X being power to hydrogen generation, isn't it? Power to hydrogen production.
Power to hydrogen, power to ammonia, That's those assets don't take too long to build, but the permitting process can be quite lengthy. So it's a bit of a question mark how fast that's going to go.
So maybe something for later this decade rather than the next coming years. Yeah, absolutely. Paul, what's the situation in the UK?
I think that's very similar. We've seen, industrial demand decline in response to high prices, and possibly also domestic demand, and even demand flexibility schemes introduced to manage demand at system peaks. I don't expect that to come back at any great rate, really. I think that will be a slow recovery process.
And demand creation that John Paul mentioned, is any of that happening in a similar way in the UK?
Yes, there's various schemes for electrolysis and hydrogen production that we're aware of, and also electrification of heating is at a commercial and industrial level. We're seeing potential development of that, and also at the domestic level, I guess the government has very much been pushing heat pumps as a solution. So that's definitely the direction of travel. The extent to which we see it in the immediate near term is probably limited, but it will start to happen.
And there's been obviously some rollback. We discussed this in a previous podcast. Rollback from the present government as well, and which maybe could hit demand in the coming year or two. Would you say that? Would that be too hard to make that judgment call there?
Yeah, I'm sure it will. I'm not sure what the latest position on heat pumps is, but certainly on electric cars, the mandate's been pushed back from 2030 to 35. I think there's probably a similar delay in the heat pump targets. So, and that will inevitably, I would think, feed through into the customer's appetite for these things if there's that uncertainty there, or that a lack of mandate for it. Then I think we'll see a slower take up.
Absolutely, John Paul. Turning to electricity generation, what were the main trends you saw in the last quarter? I know the big story was solar in the Netherlands, wasn't it?
Yes, yeah. Solar in the Netherlands produced a minus 500 price at some point. We've seen many second round auctions in the day ahead market until the rules were changed. So surprisingly, we didn't get to a situation where the minimum price on the day ahead market changed. There were a few near misses there. So that was definitely an interesting event on the market, with such a small country having such a large effect on basically the whole country, the continent. So Germany is also seeing this huge solar development. We're seeing Hungary starting to catch on. We're seeing Poland, but even the Scandinavian countries starting to develop quite a lot of solar. So yeah, that is a trend that is ongoing and will continue to go for a while, because it's just an easy thing to do. If you're a household, put solar panels on your roof, that reduces your energy bill. At least it does if you're not in the Netherlands and you don't have a market index based contracts on an hourly level, because then Sunday mornings can get quite expensive. We've actually seen people asking on Twitter, if you live in the neighborhood, please come charge your car on Sunday morning, because otherwise I have to pay. So yeah, quite interesting developments. But yes, so increasing renewables is the main headline. We've seen some closures of capacity, nuclear in Belgium and Germany, but despite those closures, we've seen lower gas and coal and lignite production across Europe. So, yeah, the extra renewables are offsetting the closures of the nukes, which is interesting. It also means that there's a lot of slack in the system. So if we get a harsh winter, there's enough gas and coal capacity to fill the gaps. So there's definitely not, or at least not looking like it right now, a security of supply issue.
Obviously, the boost to the market was with increased availability of the French nuclear fleet as well.
Absolutely, yeah. That was the thing I almost forgot. So the French have gotten their act together and basically improved the availability of nuclear assets by about 35%. They're still not at the historic average levels, but they're a lot better, and the assets are coming back slowly for the winter as well. So that's looking a lot less dim than last year.
Perfect. And so the story would be really increased renewables production, less fossil fuel on the continent. Yeah. And what's in GB, Paul?
Very similar. Yes. Yeah. We saw very high levels of renewable output in Q3, coupled with lower demand, and that's really squeezed the requirement for gas-fired generation. So the figures for CCGT output look really quite low by historical standards. I think sort of 20 terawatt hours for the quarter, whereas 25 terawatt hours for Q3 is a typical figure for previous years.
For gas-fired plants.
Gas-fired, yeah. So that's certainly reduced the requirement for gas-fired plants. Interconnector. So we've, in all quarters this year, GB has been an importer of electricity again after, I think, the 3 quarters where we were last year, where it's a combination of the French nuclear outages and the prolonged drought last year that GB was in the unusual position of being an exporter of electricity. Actually, the other factor in that was that because of the LNG facilities in GB, we were able to import gas, convert that into electricity and export the electricity to the European market. So there's and displace the requirement for gas-fired generation in Europe, which was more affected by the Ukraine war and didn't have the same LNG capacity. Yeah, and I think we saw that a consequence of that last year was to push up the price of CO2 allowances in the UK relative to the European scheme, and we now seem to be seeing the converse of that. So the differential's gone the other way now, and in recent weeks and months, that's now at a discount to the European scheme. Albeit we do have the kind of unilaterally imposed CPS scheme that applies an additional carbon charge.
What's that an abbreviation for those who aren't?
Sorry, that's the carbon price support. It's the climate change levy carbon price support. Tariff, so it's a fixed tariff per megawatt hour of input fuel.
Aren't imports from Norway up as well, Paul, in Q3?
Yes, there's been consistent imports from Norway, I think for pretty much the whole year. Yeah, there've been a few occasions where it's gone the other way, but they're very isolated. That's a contrast to last year, where we did see more prolonged periods of exports from GB into Norway, which I think was a consequence of the drought that we saw through the summer months last year.
Absolutely. And what are your expectations then for the coming months in terms of generation in the UK? Is gas going to come back? I mean, you're expecting potentially more wind, but solar's not going to have that much of an impact. So what are going to be the main generating facilities going forward?
Yeah, solar will decline, wind should be there, but the underlying seasonal increase in demand will push demand up, and it will be gas that would fill the gap.
Excellent, Paul. And just to sort of round off, I think, a lot depends, as I said in the intro, on temperatures going forward here. What's the winter looking like at the moment, Jean-Paul? I know it's a bit hard to say, and you're not a meteorologist, but what are your kind of expectations here?
So, I mean, all the building blocks were nicely in place for a very moderate winter in terms of energy prices. So the gas storages were nicely filled. The hydro situation is better than average. So that looked all pretty comfortable. I mean, even a harsh winter would not really put us in any problems apart from sentiment, maybe. But yes, we're seeing now quite a lot of political or geopolitical movements, which just introduces additional uncertainty in the market, which means that even if the fundamentals are right, we may still see upward pressure on prices. So that risk, I think, is considerable. I think we're definitely going to see volatility based on changing information. And I do think there are parties that have a benefit in having or creating uncertainty. So there's all kinds of things happening at the same time. But fundamentally, it looks all very moderate for the winter. The supply situation would be very good if there wouldn't be these geopolitical pressures.
And Paul, finally, would you agree with Jean-Paul here that geopolitics trumps fundamentals going forward?
Yes, I think so. whatever the fundamentals are, and if the fundamentals are robust, the geopolitics has the capability to change those fundamentally in a very short space of time, and just fundamentally change everybody's assumptions as to market stability and security. Yeah. And importantly, the sentiment around that and the risk premiums that need to be factored into market trading activity.
Absolutely. So we'll see what the next few weeks bring. It's certainly looking very uncertain at the moment. But in the meantime, gentlemen, thank you very much for being guests on the Montel Weekly Podcast.
You're welcome.
You're welcome. Thank you.